Hey guys, good afternoon, everybody. Today is Tuesday, October 29th. It is 2:01 right now. Scheduled mentoring session is for 2 o'clock. So I'm going to go ahead and set up this room real quick, and we will get started shortly with our session for today. Looks like we are good to go. So let me get this link sent out to you guys here in the premium. Also, it's been a mentoring session. Last time we had a mentoring session. There we go. Wow. There we go. All right, links are sent out. So it's good a few moments for people to make their way in, of course. And then we'll get started shortly. Update my whole new laptop here. Jet trader. All right, guys, good afternoon, everybody. Today is Tuesday, October 29th. It is 2:03 right now. Our scheduled mentoring session is for 2 o'clock. So if you guys have any questions, feel free to put your questions in the chat. I mean, this session is pretty much open to you guys. Whatever questions you guys have, feel free to pop into the chat. I will cover a couple strategies just to give yourself a little refresher um, as we get into the middle of the fall season and as we get closer to the winter season, of course. Fall season is supposed to be very volatile, so we typically would want to look for directional strategies, but as you guys have seen for the past probably the past 2 or 3 weeks, we've had a lot of a sideways market. The winter market is typically sideways, so I think we'll kind of review like the strategies that we do during a sideways market like that. It's typically going to be like a V1 variation, CV pattern, or high-level momentum scout. So I'll probably list a couple of them right here actually while we wait for people to join in. Hey Maria, hey Jamie, how you guys doing? So I'll put this over here real quick. So most used directional strategies. We'll put so we have and we got so many strategies, I can't even remember the names right now. We have I don't know, I'm blanking out. We have one of those momentum pullback scalp. I'm just gonna like name the ones that a lot of people use. There's just so many strategies. They're very similar, but they just have different entry points. So we got that. We've got the market flow V2. These are probably going to be like some of the main ones that are typically applied by a lot of the people in the group. Market flow V2, momentum pullback scalp, pivot scalp, momentum scalp. So I could think of another high-low scalp, of course. I think those are like the main ones, triple confluence. I'll try to just go over these. I'm not going to put all the strategies here, of course. There's too many strategies to cover, but I'll try to cover a lot of these here. Most used ranging strategies. Hey, Layla, good to see you here. So for arranging strategies, we have V1 variation. And these are just the main ones again. I'm not going to list all of them because there's too many to name here. V1 variation, consolidation, variation, and the high-low momentum scalp. Those are probably like the main sideways strategies that that people are typically applying. So, all right, guys, looks like majority of you guys are here so far who requested this mentoring session for today. So good afternoon, everybody. It is 2:07, Tuesday, October 29th. For this session, we're basically going to review a lot of the strategies that we've used and a lot of the main strategies that people are still currently using. As you guys know, most of the strategies are very similar. They just have different entry price point. Some of them are market orders, some of them are pending orders, some of them are they're time-based orders. So these are basically the main ones here. If there's anything else that you guys want me to cover, feel free to hop into the chat and feel free to ask away. This session is mainly for you guys. So whatever you guys need help with, this is your time to ask questions. During the live session, it's hard to ask questions because we're looking for entries. So I mean, this session is really going to be open to all questions that we have here. So I'll cover these strategies pretty much one by one. I'll go over a few examples. If there's any strategy that you want me to focus on a little more than others, just let me know. I can pull up as many examples as you guys need. It's just these strategies are so simple and they're so straightforward that I don't think many examples are really necessary unless it's something that you guys need help with. So yeah, exactly. CJ said, yeah, I wasn't going to miss this session. This session is going to be good because, like I said, we're in the middle of the fall season. Typically in the fall season, the market should be moving directional. The problem with this year is that this year is slightly different because it is an election year. So, typically in the fall season, you get a lot of movements like this where price continues to flow, right? This is where you get market flow, where price goes upwards or it goes downwards. If you look at the market from today, we didn't really have that. We had a lot of a sideways move here, actually. So price did climb up right here when we were trading up until 8 o'clock. So we did have that directional push that we were expecting. However, once 7 o'clock hit, I mean, price pretty much just went sideways from here, as you can see. So, I mean, it's just the market that we're currently in. There's nothing that we can really do about it. I mean, obviously, we have to adapt with the market depending on what the market structure is giving us. I mean, the market structure is not really hard to really read here. Let's go over to the clean chart real quick. So I can kind of show you, what I mean by that. So basically, our live trading session is between 6:30 and 8 o'clock, right? This is our live trading session. So basically, this little gap right here is basically where we take our trades. We're looking for that directional move. Today we had a pretty decent directional move, but lately it hasn't been like this. My sweet spot for volatility is going to be between 6:40. So this is our live trading session time in the morning, but my actual time for scalps is even tighter. It's between 6:40 and 7. And you can kind of see here why, because between 6:40 and 7, we had a very nice push to the upside, right? At this point, I think there was about 3 market flow V2s that came up and they all hit full TP for a lot of points. We had one that hit 60 points, one that hit 30 points, and one that hit for 10 points. So you can see this is my edge, basically. My edge is between this time period. However, if you trade until 8 o'clock, you can see over here, and I'll just back this up a little bit. You can see between 6 and about, we'll say 7:30 here. This is where the market movement was like really moving, right? We had price kind of go sideways for a little bit, then it climbed up, retrace, climbed up higher, retrace, climbed up higher. I mean, you could have like even caught more here because we had about three market flow V2s down here, right? Those are like the main entries. And then we also had the breakout, which was a full TP over here. And then on top of that, we had a couple more market flow V2s that came up right here. We had about like, I think 15 entries come up today. We had like about 7 market flow V2s. We had about like 7 liquidity pushes. And then of course we had the biggest move of them all, the breakout. So today was a pretty decent day. And this is typically what we look for during a fall season. So during a fall season, we try to stick to the directional strategies. However, lately it hasn't been like that. For the past 3 weeks, we've been stuck taking these ranging. Well, not I haven't been taking them, but we've been looking at them. And during a sideways market, these ranging strategies are typically what you want to focus on. So, yeah, Jamie said market flow V2 is what I'm here to learn more of. Okay, so yeah, we'll probably focus on that mainly because that's the main strategy that we typically use for directional moves. So we'll start off with that right now. So let's go over here real quick let's go to the start of market. I'll go to where the market started to kind of flow, which was basically like right here. So I'll put these strategies. Well, we'll kind of look at different entries along the way because there's going to be more than one that come up around the same area. So I'll just use this as as a list of strategies that we'll look at. But let's start off with the market flow V2. So for the market flow V2, you're going to look for price to establish a direction of market flow. So what I mean by that is when you're looking for a direction, for a price to establish a direction of market flow, you want price to kind of climb up, retrace, climb up, retrace, climb up. That's kind of what you're looking for. Or in the opposite direction, you want to look for price to drop, retrace, etc. You're just looking for some sort of direction of price. There's a couple of ways to do it. For one, you can look at the pivots. If pivots are kind of angling down and you see price kind of drop down a little bit, retrace, retest the pivot, come down, retrace, come down, retrace, come down. That's how you can look for price to establish market flow. Same with this here. If you're looking for price to push up, you'll look for price to push up above the pivot to retrace, push up, retrace, push up, retrace. Looking at price right here, it was bearish, and then around 640, it started to swing to the upside. So now, in order to identify the direction of market flow, you want to see price kind of push up, retrace, etc. Once you're able to establish the direction of market flow, then you're going to confirm direction of momentum using momentum indicator. So you're basically going to look like if you're looking for market flow to the upside, then you want to look for direction of momentum in that direction as well. So right here, we have price starting to swing to the upside. We have a buy signal right here. That's going to confirm, basically the first 2 steps. So I'll let this push up a little bit. There you go. And you can see right there, it's starting to confirm. So we got price to push up a little bit. Push up, retrace, push up. And then now we're looking for that retrace and push back up higher. Having this here right now, I'm going to clean up the chart a little bit. Having this established, now you're going to look for step 3. Confirm price retracement towards pivots. Next, you're going to set pending limit order at whole number nearest to pivot 1, green pivot. And it's super simple. It's not, again, like it looks kind of complicated if you're looking at by step, but if you're going to if you look at it from a flow perspective, it's super simple because you don't have to look at everything. It's not like a checklist. It's kind of, you're going with the flow of market. If market's flowing to the upside and there's a buy signal, then you're going to look for retracement. Basically, you're looking for the same pattern of market flow. You're looking for price to push up, retrace, push up, retrace, push up, retrace. The only things that you kind of want to confirm here are the momentum signals, of course, because if you have a sell signal here, you're not going to look for any bias, right? So you're going to look for price to establish directional market flow. We already confirmed that price is pushing up, retracing, pushing up, retracing, etc. Step 2, you want to confirm the direction of momentum using the momentum indicator. So we have a buy signal right here. With that said, we have steps 1 and 2. Step 3, you want to confirm price retracement towards pivot. So you can see here prices are tracing down to the pivots, right? Once you have that confirmation right there, your next thing is to set your pending order at the next whole number. So you can see here how price, let's see, price comes down a little bit. So we're going to go back to this here. The next whole number closest to the pivot is going to be right here at the 450 mark, right? So if you want to take an entry here, you don't need to enter right away. You just need to put a pending order right there. Depending on your entry, there's a couple different TP stop losses that you can use. If you want to go for a quick scalp, you can use a 1030. That's going to be the typical one that a lot of people use. They like to double dip, triple dip into this position. They get in, get out, get in, get out, get in, get out, etc. They try to hit it about 3 or 4 times, and they're done with the trade. The other thing that you can do between 640 and 7, like we did today and like we've been doing, is you can go for a bigger move. If you feel confident with the position, like right here, this looks like a really good market flow push. On top of this, our breakout was for a buy, so it kind of lined up with like what we were looking for. So you had a lot of confluences going in that direction. So for example, right here, if you wanted to go for a bigger move, you could have used a 30-30. This only happens once a day, right? If you're going to take any trades after 7 o'clock, it's best to use a 10-30 split because price starts to go sideways. However, if you're looking for an entry when the volatility is high and there's a lot of direction, then you can go for either the 10-30 split, which is a normal scalp. You can go for a 30-30, which is more of a day trade. And if you're feeling really confident about the position, you can go for a 60-30, which is even bigger, right? I mean, it's just up to your preference. It just depends on like what you're looking for, how comfortable you feel with these positions. You know, some people like to take 1 R, some people like to take 2 R, some people like to do negative risk reward. It's really up to the person who's trading because you're in control of your account. So depending on your confidence of the trade, you can go for the 60 points, you can go for the 10 points, or you can go for the 30 points. So right here, price comes down a little bit. You can see how price comes down, it fills the order. So what you're looking for here is you're looking for price to come down, push up, retrace, fill it, and climb up higher. That's what you're looking for here. So with that said, right here, price filled it. And looking at the 10-point move right there, you can see price pushes up, and that's a full TP, right? We caught that on the live session. Again, if you're going for the 30 points, same thing right there, depending on what you wanted to go for. If you wanted to go for the 30 points, that hit full TP as well. So for example, these two already hit. So 30 points hit, the 10 points hit here. If you wanted to re-enter the position, you would just put another pending order at the next whole number. So like price is pushing up right here. The next whole number is at the 60 mark. However, the 60-point move is still running. So at this point right here, depending on which entry we're taking, you let the trade run again further. It didn't come back to refill, but the 60-point trade was still running. And you can see a full TP right there. So this right here is an example of a market flow V2. Your TP stop loss, again, is going to vary depending on the person. You know, if you want to go for the bigger move, go for the bigger move. If you want to go for the smaller move, go for the smaller move. It's just up to your preference. Some people like to double dip. Like I said, for me personally, I would probably double or triple dip into this position if I had the opportunity. Or I'd go for the 30-30. Typically, I wouldn't go for the big 16-point move. I would just use that as a confluence to identify direction. But for the most part, you can tailor it to however you want it to be. So there goes an example of a market flow V2. If you guys have any more questions regarding that, you know, feel free to let me know so I can show you another example. Otherwise, if you guys are good with that, we'll move on to the next strategy here. Actually, we don't even have to cover the momentum pullback scalp unless there's someone specific who wants me to see that trade. This trade is literally the same thing as market flow V2. There's just less criteria to it. So if you guys want me to cover that, feel free to let me know. Otherwise, I'll just go over like a quick example because the example falls within the same, basically the same thing here. You're just not using the pivots. So I'll just go over a quick example of a momentum pullback scalp. We'll go back to the same example here for the market flow V2, but now it'll be considered a momentum pullback scalp. So looking at this right here, so we got price pushing up. Let me go over here real quick and I'll just put the criteria for a momentum pullback scalp. It's pretty much going to look exactly the same. It's just the entry times or entry points are going to be a lot closer versus waiting for price to really pull back to the pivot. So momentum pullback scalp strategy. First, you want to confirm direction of trend. using pivots indicator. Second, confirm direction of momentum. Confirm retracement. Set limit order at nearest whole number. So this is an example of the momentum pullback scalp strategy. So we got price pushing up right here. You can see there's a direction of trend right here as price is pushing above the pivots. Pivots are starting to angle into a ribbon right here. Second, you want to confirm the direction of momentum. So if you look at the example, the requirements for the market flow V2, it's very similar. The only difference here is that for the market flow V2, you're looking for price to pull back to the pivot versus the momentum pullback scalp, where you don't have to wait for price to pull back that far. You're just looking for the nearest whole number. So same thing here, direction of trend, we already confirmed that price is above. We have a buy signal right there. I'll put up the levels. So the next whole number would be right here at the 50 mark. So basically you're just looking for price to pull back really quickly and then push back up very quickly as well. So we've got that set up right there. Price pulls back to that point and pushes right up. So there's an example of a momentum pullback scalp. So for this one right here, instead of waiting for price to pull back to the 60, well, the 60 obviously would give you a better entry point, but you would maybe miss the position if it didn't pull back that far. For this one right here, it would just go from the 50 mark. So it's pretty much the same strategy. Like I said, a lot of these directional strategies are very similar. The only difference is entry price point. Some of them you get in earlier, some of them you get in later, some of them they're more riskier, some of them are less riskier. It's just up to your preference which one you guys want to take. This has been one of the favorites that we applied a lot last year. So basically what happened was I basically just altered it slightly to make it a little more less risky. Because the problem with this here is that sometimes there's pros and cons to both of the strategies, right? For this one right here, price will sometimes not ever pull back to the pivots, right? It might not ever pull back to the pivots. For this one right here is you might get in a little too early and you might get caught in fake outs. So they both have their pros and cons. I would consider the market flow a little more balanced. It's less risky. However, you might get less entries. With the momentum pullback scalp, you would take 1 entry per momentum. So they kind of have a balance there. Like you have a buy signal here, there's 1 momentum pullback scalp, then this strategy would be done with for the most part. If you were taking market flow V2s, you can just keep taking them unless you want to just take 1 per momentum. So that's like the main difference between these two strategies. Other than that, that's pretty much it with those two strategies there. If there's anything else that you guys would like to see, any more examples, feel free to let me know. I'm just going to try to zoom through these strategies here because we don't really have much time here, and it's going to take me forever to really look at all these examples here if you guys want me to go over like multiple ones. So we've covered the first two strategies. We're now going to cover the pivot scalp, and I'll see if I can find one here. For this one, we don't need the levels indicator. I don't know if we'll get a pivot scalp here because I don't think there was a buy signal that came up. Okay, there's one right here actually. Okay, so same thing right here. Strategies again is slightly different. This one's based off the momentum indicator. So this is going to be the pivot scalp strategy. First, you want to confirm direction of trend, very similar to the momentum pullback scalp strategy. Confirm direction of trend using pivots indicator. 2, confirm price movement in direction of trend, then retracement back to pivots. 3rd, confirm valid momentum signal in direction of trend. So once you have that right there, I mean, that's pretty much all you really need. Then enter on close of momentum signal or 1030 TP stop loss or preference. So again, you don't have to do a 1030 TP stop loss. It's just really up to your preference, guys. Typically, if you're scalping, you want to go for the smaller move because you're going for that low-hanging fruit. But if you want to go for something bigger, I mean, you can go for a 30-30. Typically, People go for 10, 30, 15, 15, sometimes 30, 30. So let's look at the criteria here. Confirm direction of trend using the pivots indicator. You can see here that price is above the pivots. Pivots are angling up, they're riveting out right here. So this identifies as a strong bullish trend. Once you confirm the direction of the trend, you want to confirm price movement in the direction of the trend and retracement back to the pivots. So you can see over here, price kind of pushes up a little bit and then it retraces back to the pivots right here. Once you confirm that, the last and final step is really to confirm a valid momentum signal in the direction of the trend. So we have the bullish trend here. We have price pushing up above, retracing to the pivots, and then climbing back up. This is very similar to a market flow V2, except when instead of entering down here, you would enter right at the momentum signal. So right here, we have a buy signal. As soon as this candle closes, you would enter this for a buy entry. Right there. Depending on your TP stop loss, typically you set it to 1030. You have that set up right there. The trade kind of retraces back a little bit, comes down, comes right back up, and it hits TP right there. So like I said, if you want to do a 1030 split, you can do that. If you wanted to do a 15-15, some people do that as well. This would probably hit stop loss. So that's why a lot of people don't use the 15-15. Otherwise, if you wanted to do a 30-30, you can use a 30-30. I typically wouldn't use a 15-15 because the ATR is so high and the volatility will likely spike you out before it hits your TP. So yeah, with that said right here, this is a 30-30, price pushes up and a full TP right there for a pivot scalp entry. This entry actually lines up with the momentum scalp. So I'm going to use this as the same example. Let's go back to that momentum signal there. Okay, now that we have this right here, let me go and show you an example of a momentum scalp. So again, this is an example of pivot scalp. Now let me show you a momentum scalp. Again, if I'm going too fast, guys, let me know so that I can stop and I can show you guys more examples. But for the most part, these strategies are very straightforward and simple. So you don't really have to, there shouldn't be too much confusion. I've pretty much dumbed down these strategies so that anyone and everyone can really learn them very quickly and be able to apply them right away. But again, if I'm going too fast and if you're new, just let me know and I'll show you more examples and I'll break it down for you. But again, we're going to zoom through this because we only have so much time here and there's a lot of strategies to cover. So again, right here, here's the momentum scalp. So this one's different because instead of using the pivots, you're going to be using the trend meter. This one's actually really easy, but this one's probably not going to be the most accurate. So first, you want to confirm a valid momentum signal. Using the momentum indicator, of course. 2, you want to confirm trend meter is matching momentum signal. Use chart settings. 3rd, enter on the close of the momentum signal. And then lastly, set TP stop loss to 1030 for preference. Again, it's always going to be up to preference, guys. I'm going to give you guys a foundation of like what to use here. I use 1030, but again, you guys don't have to use 1030. I just use 1030 because it gives me a safety net for the entry. But again, if you guys want to use something bigger, if you want to use a 30-30, that's probably the next best option. So right here, instead of using the pivots, you're now going to confirm the direction of momentum using the momentum indicator. We have a valid momentum signal right here for a buy. Step 2, you want to confirm the trend meter is matching the momentum signal. Right here, it's very simple. You just have to match the colors, right? Unless you're colorblind, it's going to be pretty simple. And if you are colorblind, and I only say this because we've had someone who's colorblind in the group and he needed to change the colors of his indicators, you can do that. So basically right here, you just match green and green. If you have a valid buy signal here and it's matching the trend meter below, which is green, that's going to be the entry for a momentum scalp. Once you have that right there, as soon as the candle closes, you would enter this here for a 1030 split. If you're using the traditional scalp parameters, if you wanted to use this here with a 30-30, you can use it as a 30-30. So depending on what you want to take, you can do a 10-30 or a 30-30. It's just really up to your preference. So right there, price kind of retraces back a little bit. Then it pushes up, and it hits TP. You can see this strategy right here lines up pretty much exactly with a pivot scalp. It's just the difference is instead of using the pivots here, you're using the momentum scalp with the trend meter. That's the whole difference. But if you want to use both, you can use a combination of both the pivot scalp and the momentum scalp. If you use both of them, then you'll have, your odds will be better because you have more confluences in the direction of your trade. Yeah, Maria. So Maria's asking momentum scalp, no need for pivots. Yeah, that is correct. That's why they're two different strategies. They're basically the same strategy, but they use two different criteria. One of them uses the trend meter and one of them uses the pivots. However, if you want to use both, your odds are going to be way better using both. So preferably, I would say to use both. But if you're just breaking them down by specific strategies, one uses the pivots, one uses trend meter. But ideally, you want to use both. All right, so there goes the criteria for the momentum scalp strategy. If you guys have any more questions regarding that, feel free to hop into the chat. Otherwise, we're making pretty good on time right now, so I'm going to try to get through these. The next strategy here is going to be the high-low scalp. And you'll see that a lot of these entries pretty much line up around the same area, which is very beneficial for a lot of you guys here, because it just makes things a whole lot easier. Okay, so we're done with that right there for the momentum scalp. We're now going to look at the high-low scalp strategy. So first, you want to confirm direction of trend using pivots and or trend meter indicators. Second, you want to confirm price break and close past an untested high-low. Third, enter position on close of candle breaking high-low. That's pretty much it. Once you have that set up right there, again, you're going to set TP stop loss to 1030 or preference. Again, it's really up to your preference here. Let's go back to this previous candle. Let me just go back one candle. Okay, so we have two highs right here, two highs that are untested. We have one high that's right here. And we have another high that's right here. I mean, either one works, right? So looking at the criteria here, confirm direction of trend using the pivots and or trend meter indicators. So right here, you can see prices above the pivots are angling up, the pivots are spread out. This is going to confirm that we are in a strong bullish trend. Once you confirm that, you can pretty much assume that we're in a bullish trend. If you want to use the trend meter down below here is green as well. Again, you can use both. I prefer to use both. It's just really up to your preference. If you want to use both, obviously, the more criteria you have, the better confluences you have, and the better odds you have of your trade hitting TP. So with this right here, we have this set up. And now that this is set up right here, you're just looking for price to break, or sorry, I have to add one more here. So confirm direction. Confirm, I forgot, you gotta confirm the direction of momentum using momentum indicator. Sorry. It's just like we've done the strategy so many times that I always forget that you need that, but that's like one of the main things you're looking for. So there we go. So first, confirm the direction of the trend using the pivots and or the trend meter. Right here, price is bullish. Second, confirm the direction of momentum using the momentum indicator. Right here, we have a buy signal. So you just want to make sure that you have momentum and you have a trend. So we have a bullish trend, we have bullish momentum. Third, you want to confirm price break and close past an untested high-low. Maria's asking any kind of high-low or only higher highs and lower lows. So any high-low, that's the whole point of the strategy. Right, you can use any high-low, whether it be a higher high or a lower high, or a lower low or a higher low. It's just really up to your preference. It's not really up to your preference. It's really any high-low. It just has to be untested. So you can't have price come and touch it and then come down, right? If it comes and touches it and comes down, then that's going to be tested. But if it hasn't touched it yet, then that's considered untested. These are both untested. Price hasn't came up and touched it yet. And these are going to satisfy the criteria for a high-low scalp. So again, first, confirm the direction of the trend. We have a bullish trend. Second, confirm the direction of momentum. We have a buy signal right here. This is going to confirm that we're looking for a buy because we have a bullish trend and we have bullish momentum. For step 3, you want to confirm price break and close past an untested high low. We have 2 untested high lows right here, right? So now you're just waiting for price to push above it and close. That's literally all you're looking for. You have all the criteria there. Now that price has pushed up, you can see this candle here has pushed up past it, and it has broken and closed past the high low, right? Once you have this set up right here, you're going to enter your trade as soon as this candle closes, and you'll set your TP stop loss to whatever you prefer. If you want to do a 10-30 split, like I said, you can do that. If you want to do a 30-30, you can do that as well. These are probably the 2 most popular options. It's going to be a 10-30 or a 30-30. Those 2 are going to be your most popular because either you're going to go for a 1-to-1 or you're going to go for a 1-to-3. It's just really up to your preference there. Once you have this set up at that point, you would enter the trade. You'd be in the position now. Your trade's running in profit. And there you go, full TP. So again, you guys can see here how a lot of these strategies pretty much line up around the same area. There was market flow V2s down here. There was momentum pullback scalps all around this area. There was a pivot scalp right there. And then now there's a high-low momentum scalp right here, as well as a momentum scalp below. So it is pretty straightforward. So Maria here has a question. She's asking me, does it need a prior low high? No, so everything down here is irrelevant, Maria, because you're not looking for a sell, right? So it doesn't matter if there's anything below here. You want to stick to the criteria. You don't want to make your own requirements up, right? If I didn't put the requirements up here, you don't have to look at it. So try not to make it more complicated than it really already is, because with a lot of people, and not just you, Maria, just with a lot of people, they try to add more criteria to it. That's not really necessary. So if you're looking for buys, the lows here don't matter, right? The lows here don't matter at all. If you're looking for sells, the highs aren't going to matter, because what you're looking for is you're looking for price to break past structure, which is the high low, and you're looking for it to continue up higher. So yeah, just keep it simple. I know a lot of people, they try to make it a little more complicated, and I get it. Sometimes you're like, oh, this is so easy. Like Sean is probably missing something, and you need to add something else. But the whole point with the strategies here is that you'll use the strategy as a foundation, and then you'll use other confluences to help pretty much make a better educated decision. Because if, of course you want to have as many confluences as possible, but you don't want to have too many confluences, because if there's too many requirements, you're just never going to have an entry. So yeah, Maria, good question there though, because I know a lot of people have used that as a requirement. It's okay to add requirements, but like I said, if you have too many requirements, you're just never going to have any entries show up. So again, right here, those are pretty much all of the entries with regard to market flow, momentum pullback scalp, pivot scalp, momentum scalp, high-low scalp. And now we'll try to look for a triple confluence. I don't know if we'll find one here, but if we do find one, I will show you an example. The reason why I don't think we're going to find one is because the volatility here started to die down a little bit. And I don't think there's one here, but if we do find one, no. Yeah, if we do find one, I'll show you. I just highly doubt it's going to happen. Not there. Okay, perfect. We have one right here. Okay, so let me show you an example of a triple confluence. This strategy doesn't come up very often, but when it comes up, it almost always hits. That's why it's like it's one of those rare strategies that comes up every once in a while. But when it does, it's a hitter usually. So triple confluence strategy, it's literally what it says. So triple confluence meaning it's basically 3 strategies in one. So first you want to confirm price, break, and close past untested high low. Second, you want to confirm candle break and close is a valid momentum signal. Third, you want to confirm trend is matching using pivots indicator and trend indicator. So yeah, it's pretty much what it's called, triple confluence, meaning 3 strategies in one. So once you have that, you can enter on the close of the momentum signal. candle, TP stop loss set at 1030, or again, preference. It's all going to be about preference here, guys, because I know some of you guys don't like using my 1030 split, and that's completely fine. If you want to use that, use whatever you like, but I'm just giving you guys a foundation here. All the strategies here are based off foundation, just so you understand the strategy, but your TP stop loss, it's going to depend on the person, whoever's applying it. So looking at the triple confluence right here, again, this is a very simple strategy. It's really just like understanding the criteria and following it to a T. A lot of people try to make their own little changes to it, and that's where a lot of people screw up because they're making it more complicated than it really is. So again, right here, confirm price breaking close past an untested high low. We have a high low right here. This candle breaks and closes past it. I guess you can say this was tested, but I'm just going to use this as an example because obviously we're probably not going to find an entry here. I just want to use this to show you guys an example of a triple confluence. So basically, confirm price breaking close past high low, which this candle here broke and closed past it. Second, you want to confirm the candle breaking close is a valid momentum signal. There's a sell signal right here. So this is going to be a valid momentum signal for a sell. Once you have those two steps down, move on to step three. Step three, you want to confirm the trend is matching using the pivots indicator and the trend meter. You can see here that price is below the pivots. The pivots are angling down and they're starting to spread out. So that's going to identify as a bearish trend for the pivots. And next, you want to confirm that the trend is also bearish for the trend meter. Right here, you can see the trend meter down below is red. So it's very simple. You just want to make sure everything lines up. Sell signal, valid, pivots right here, angling out, prices below the pivots, and then the trend meter down below is also red. So with the triple confluence, you kind of want to just forge basically three strategies in one. And those are going to be the main confluences, especially if you have three strategies that are high win rate. If you have all three lining up on one specific candle, it's usually going to indicate that price is going to go further in that direction. So again, step one, confirm price breaking close past untested high low right here. Second, confirm candle breaking close is a valid momentum signal. This is a sell signal right here. Third, confirm trend is matching using the pivots indicator and the trend meter. The trend here is bearish, of course. Fourth, enter on the close of the momentum candle. So again, right here, you're going to enter at the close of this candle. It's going to be a market order. You can either set your TP stop loss to 1030 or you can set it to 3030. Again, it's up to you. 1030 is right here. If you want to do 3030, again, you can do that as well. It's just really up to your preference. Once you have that lined up, you let the trade run. Now the trade is running in profit. And there goes your triple confluence strategy. So again, if you guys have any questions, feel free to pop into the chat. Otherwise, we'll continue moving along with the strategies here. Let's see, Ed's asking, would the signal have to be on the candle that breaks? Yes, that's correct. That is going to be step two. No, it's got to be the candle that breaks. That's why for this here, they all have to line up. That's why I was saying like this strategy doesn't come up very often because you don't really see that happen a lot, right? Like if you look back over here, you'll see momentum signals, but they don't really break and close past the high lows. They'll be like right in the middle. So like that's why for this strategy, when you see it happen, it's usually going to break through it because so putting this in a simpler sense is that you're getting momentum, like the initial break of momentum, and then it's also breaking structure. So you have two and two together, basically. You have price breaking structure. That's like one really strong confluence. And then on top of that, you have the momentum. So that's like you have price breaking structure. This is going to indicate that, okay, momentum is probably going to follow through right here because you got everything lining up perfectly. So that's all I was saying. If you guys see this strategy, it usually hits almost every time because it doesn't happen very often. When it does happen, you're kind of just getting in exactly where you need to be, where the momentum is starting. And then you can see right there, it just continues to drop even lower. So yeah, this is like one of everybody's favorites. I think whenever this strategy comes up, almost everyone takes it and it almost always hits. I think like over a year time, we've probably only seen a triple confluence maybe not hit maybe once or twice over a whole year. But then again, that entry only comes up like maybe once a day or once every couple of days. So if you're patient enough to wait for it, I mean, it'll pay off. It's just you have to really be focused and looking for it because you can see this entry came up at like 9:30. At that time, you're probably going to be tired already from like watching the charts. Because if you were on from 6:30 up until 9:30, that's like 3 hours later. At that point, you probably wouldn't be paying attention and you most likely would have missed it. But this entry does come up sometimes during the live session time, usually when the volatility is a lot higher. All right, guys, so there goes pretty much all of the directional strategies. These are the most used directional strategies. There's obviously more that you can use, but if you have a foundation of these, you can kind of mix them together because they all come up around the same time. So you'll usually see these two come up around the same time, market flow V2s and momentum pullback scalps. And then for these two right here, you'll usually see these come up together because the pivots usually line up with the trend meter. And then whenever you see a high-low scalp, so basically, if you're able to identify these three strategies right here, you'll be able to identify a triple confluence pretty easily because you'll be looking at all like for these three to come up anyways. So if you're just looking for a high-low scalp and then you factor in the pivots in the trend meter, you know, you'll understand that that's kind of what you're going to be aiming for. So there goes the most used directional strategies. If you guys have any more questions regarding these, feel free to hop into the chat. Again, these strategies work very well during a directional market. So when you see price, these strategies would be used when you see price climbing to the downside like this, or if you see price climbing to the upside like this. Right? Typically during this time of the year, this should be the type of movement, but you can see over here just looking at the charts, it doesn't always end up that way. Sometimes it'll go in a direction and then it'll go sideways and then eventually it'll come back down. But it's not like how it normally is. Like normally during the fall season, you'll just see it climb up like this all day for the entire session. So I'm hoping after the election, we'll have more of a directional move, but if we don't, that's where these come in, the ranging strategies. So we're done with this here. You know what? I'm not going to delete that. I'm going to leave it on there so I can show you guys later if you guys want me to review that. But now let's take a look at V1 variations. So we have an example. We have an example right over here. It's perfect. All right, let me zoom in real quick. All right, V1 variation. Again, a lot of these strategies are going to line up together. They're going to start to make sense. Like if you could understand these most used strategies, it's going to be easier for you to adapt to the market. If you see the market going sideways, you're like, okay, perfect. I'm going to go for V1 variations. If you see the market going directional, it's going to be pretty simple. Like, okay, perfect. I'll use a market flow V2 or something like that. But here's a criteria for a V1 variation. So V1 variation strategy. This one's super, super simple. So confirm a double body or double wick rejection off high-low. Right? Once you confirm that right there, next you just want to confirm, or actually, let's do this. I'm going to put these in a different order. So because first you want to confirm the trend. Great. So confirm direction of trend using pivots and or trend meter indicators. So once you confirm that, now you want to confirm a double body or double wick rejection off high-low in direction of trend. Once you confirm that, third, confirm pending momentum in direction of trend. Enter position on close of double body, double wick candle. TP stop loss, 1030. Again, this is going to be a recurring theme, guys. So TP stop loss is going to be 1030 standard or preference. Again, the preference is going to be 30-30 or whatever you guys want to use. Right? So confirm direction of trend using the pivots and or trend meter indicators. So again, right here, we want to confirm the direction of the trend. We can see prices below the pivots are angling down and they're spreading out. So this is going to confirm a bearish trend. Once you confirm that, you want to confirm where you can confirm the direction of the trend using the trend meter. So right here, prices below the pivots, trend meters angling, trend meters red, pivots are angling down, they're spread out. Use two different confluences there for bearish trend. Once you confirm that, you move on to step two. Step two, you want to confirm a double body or double wick rejection off a high low in the direction of the trend. So right here, we have a double body rejection, right? We have both of these candles right here off this lower high. It's a double body rejection right there. If you're confused whether it's a double body, just draw a box there or a line, and you can see that they're lined up. This is basically identifying as a ceiling or a resistance point. Once you have that lined up right there, you have steps 1 through 2 met. For step 3, you want to confirm a pending momentum in the direction of the trend. The reason why you want to do this is because you're basically identifying a breakout to happen in this direction, right? Pending momentum, meaning that there's no sell signal here already. There's a buy signal here. So the next momentum has to be a sell, right? It goes from buy, sell, etc. So now that we have no sell signal here, this is a buy signal, you know that the next signal is a sell. So that's going to be a pending momentum in the direction of the trend because we have a bearish trend here. So having that all lined up, confirm direction of trend using the pivots and trend meter. It's bearish. Confirm that there's a double body or double wick rejection off a high low. There's a lower high right here. It's a double body rejection. Step 3, confirm pending momentum in the direction of the trend. You can see that there's no sell signal here, so there's going to be a pending sell. You're going to enter the position on the close of the double body, double wick candle. Right here, this candle closes. You're going to enter this here for a sell. Again, depending on your preference, if you want to do a 1030, that's fine. This is going to be standard. If you want to do that, fine. If you want to do a 30-30, even better, right? And the reason why this is going to be really key is because since you have a sell signal, if you measure these sell signals over here, you're going to have at least a decent push. Like if this becomes a sell signal on the next candle, or the candle after it, you'll have like maybe a 50-point push or maybe even a 20-point push, right? So once you have that lined up right there, this is a V1 variation strategy. This is good during a sideways market. It's either good during a sideways market or directional market or a sideways directional. It's just up to whatever the market's giving you for the day. So right here, price is going back and forth, and you're basically trying to catch the range. So once you have this right here, let the trade run. You see how there's a sell signal right there. It's finally closed. Now you're going to catch that breakout as price continues to climb lower. Price comes lower from there, and there goes the breakout. So there goes an example of a V1 variation strategy. Super simple, super straightforward. You can see here that even though market is not going in a direction, it's going back and forth, you can still make a profit in a sideways market. That's why the strategy is good in this type of market condition. So if you guys have any questions regarding the V1 variation strategy, feel free to hop into the chat. Otherwise, you can see here it's very simple, very straightforward. If you guys want to back test this and you guys have access to the indicators, perfect. There's a ton of examples here that you can go back and look at. If you guys are ever curious to test it, just what I'd recommend is replay the chart anywhere, like literally anywhere. It doesn't have to be during market session times. It could be literally anywhere. There's an entry that happened right here. This was at like 3:30 a.m. London session. If you want to go back and just test it during London session, you can do that. Just replay it and then mark up all the entries that come up. So with that said, there goes an example of the V1 variation strategy. Let's now move on to the consolidation variation. It's very similar to the V1 variation, except it's a lot simpler. So now that we have this here, I'm going to look for a CV pattern, and that's what we call it. We call it a CV pattern. All right, let's see what we got here. Okay, perfect. So there's one right here. Okay, so I might get the criteria on this a little wrong because I'm not sure if I told you guys to look for a pending momentum, but I'm just going to use the same criteria as the V1 variation. We'll use a pending momentum. I think that criteria works a lot better than not because it'll typically give you that breakout move that you're looking for. So here's the consolidation. Again, this is a sideways strategy. So consolidation variation strategy, step one, confirm direction. And this is going to be a recurring theme as well. You always want to trade in the direction of the trend, even if the market is not trending, because this is going to give you a better chance of price going in your direction, even if you make a mistake. So confirm direction of trend using pivots and or trend meter indicators. Second, confirm so we'll do 2A. It's basically the same criteria, but it depends on which direction you're. Or I'll just put 2, and I'll just put some slightly different criteria here. So confirm high green candle or sells or low red candle for buys, followed by smaller candle. Significantly smaller candle. Or we'll break this into I'll break it into 2 separate confirmations so there's no confusion here. Firm. And you guys can see that, like, I know these strategies by heart. I don't have to like look up the criteria because the strategy is so simple and it's so straightforward that you don't really need specific criteria, or I don't need it at least because I can just tell you exactly what it is. So confirm following candle is significantly smaller candle. Basically engulfing pattern. You guys know what an engulfing pattern is. It's basically when it's the previous candle is engulfing it. This is like a reverse engulfing candle. Reverse engulfing. Once you confirm that, smaller candle. Again, TP stop loss set to 1030 or preference. So again, it's super simple. It's very similar to the V1 variation, except this is more of a, you're looking for a reverse engulfing pattern. So looking at this here, and sorry, let me add this again right here. Or confirm pending momentum candle in direction trend. All right, so this is a consolidation variation strategy, another ranging strategy that's very common and highly used. So confirm direction of trend using the pivots and or trend meter indicators. You can see over here that price was below the pivots. It's kind of shifting up a little bit. So this is a little harder to use both indicators. I think the best way to do it is really to use the pivots instead of the trend meter, because the trend meter isn't going to be as useful. So because when you're taking this type of ranging strategy, the trend is probably going to die down by now. And at this point, you're probably not going to you're not going to be able to find a established trend. You can see here the trend was bearish and then kind of died out when neutral, was like slightly bullish, then back to bearish, now back to neutral. So you can use the pivots and or the trend meter, but for the most part, you're probably only going to find the trend using the pivots. So you can see over here that price was below the pivots. It's slightly pushed up right here, but the pivots are still angling in the direction of a bearish trend. Once you confirm that right there, you now move on to step 2. So step 2, you want to confirm a high with the green candle, or for sells, let me fix this for sells. Okay, sorry, I just read that wrong. Confirm a high green candle for sells or low red candle for buys. Right here, since we have a bearish trend, we're going to look for a high green candle because we're looking for a sell here. So bearish trend, you're looking for a high with a green candle, which is right here. That's going to be step 2. Step 3, you want to confirm that the following candle is significantly smaller. It's a reverse engulfing. So typically for an engulfing pattern, you look for the second candle to be bigger, but for this, it's going to be reverse. So right here, you can see that we have the high with the green candle, and the following candle is significantly smaller. You can see the green candle here is about a 40-point candle, and then the red candle right next to it is only 18 points. So obviously it's significantly smaller. It's more than less than half. It's about a third of the candle size. Once you confirm that there, you want to confirm that there's a pending momentum in the direction of the trend. And the reason we want that is because you want price to push right back down. So if you have that pending momentum, if a sell signal comes up right here, this can easily push down and hit your TP. So again, looking at the criteria, confirm the direction of the trend. The trend here is bearish. Second, confirm a high green candle for a sell. Since the trend here is bearish, you're going to look for a sell. You have a high with a green candle right here. Step 3, you want to confirm the following candle is significantly smaller. It's a reverse engulfing pattern. Right here, you can see that this candle is huge and this candle is very small. For step 4, you want to confirm there's a pending momentum. Once you confirm all of that, you can enter on the close of the smaller candle. So since this candle here is smaller, we're looking for price to continue in the direction of the trend. You're going to enter a sell here. So once you have that ready right there, you're going to set your TP stop loss to 1030 if you want the traditional 1030 split. If you want to go for the 30-30, again, it's just really up to your preference. Once you have that lined up right there, you let the trade run. Comes down a little bit. I don't know if it actually comes down. I didn't really look this far. And there you go, it comes down right there. So you can see over here, it takes a little bit longer because the volatility is so flat. Yeah, I mean, this trade ran for a while. So this is where it comes into play where, if you go for the 30-30, it's going to be a little riskier because there's not very much direction. For a lot of these ranging strategies, I would probably only go for the 10-point move. I wouldn't go for the 30-30 because the thing is you want to get in and out of this position very quickly. So although the 30-30 did hit here, this trade ran for about almost 30 minutes. It's a long time for a ranging strategy. So there's an example of a consolidation variation. Typically, I would just go for the 1030. You can see if you went for the 1030, it would have hit immediately on the following candle. But again, if you want to go for the 30-30, you can. There's nothing wrong with that. So there goes an example of a consolidation variation. We have one more strategy to go, which is a high-low momentum scalp. Again, if you guys have any questions, feel free to hop into the chat and ask. I kind of went through these pretty quick, but most of you guys are already familiar with these strategies. So this is just a quick refresher for a lot of you who are kind of curious, what should you apply during what kind of market conditions. Lately, the market's been ranging, so these here have been more of the more ideal ones, but you don't have to use these ones. There's always going to be options for you guys to choose from. So again, let's go over here and I'll show you a high-low momentum scalp. So this is a favorite from basically last winter or 2 winters ago. Basically 2 winters ago and last winter, this was one of the most popular strategies, the high-low momentum scalp, because we had a lot of back and forth markets. Like literally nothing would happen. We just have a lot of back and forth throughout the entire winter season. So for this strategy right here, this is the high-low momentum scalp strategy. First, you want to confirm a higher high or lower low. Second, or we'll do 2A. If higher high, confirm, sell momentum, breaking, sell momentum candle, breaking and closing past pivots. One, two. 2B, if lower low, confirm buy signal, breaking, closing pass pivots 1 and 2. So you guys can see it's I mean it's the same thing. It's just one if it's for a sell and one if it's for a buy. Once you confirm that, enter on the close of the momentum signal. TP stop loss set to 1030 for preference. And that's pretty much it. So you can see a lot of these strategies are very similar. The only difference here is like you're either trading based off breaking close off pivots, you're trading off reversal patterns, or you're trading off reverse engulfing. They're all reversal strategies. That's all you're like, that's literally what all these strategies are for. They're just identifying reversals, and then you try to ride the move in that direction. So for this example right here, we have a higher high, right? So step one, confirm a higher high. Now that we have the higher high right here, since we are looking at a higher high, you want to confirm a sell momentum candle breaking and closing past pivots 1 and 2. So this sell signal right here breaks and closes past pivots 1 and 2. If you guys just want to turn off pivots 3 and 4, that's completely fine. You can leave it at that. It makes it a lot easier to look for. So we have a higher high right here. You have a sell signal breaking and closing past pivots 1 and 2. Once you have that right there, as soon as the sell signal closes, you enter a short position right there. Again, if you want your TP stop loss at 1030, you can set it to that. If you want it set to 3030, you can set it to that as well. It's just really up to preference. Once you have that lined up right there, you let the trade run, and you can see price pushes down and eventually hits TP. And you can use this because this is just going to show back and forth. Whenever price bounces back and forth like that, you're just catching the reversals. So you're using the higher high to identify the ceiling. You're using the momentum to identify price push back to the lower support level. So there goes one example right there. Let's see if we can find a buy one. I don't think there's any buy ones here. And then, of course, you want to factor in the red flags too. So just keep that in mind, guys. Factor in the red flags because that's going to be where you avoid trades. So again, right here, here's an example for a buy. We have a lower low right here. This buy signal breaks and closes past pivots 1 and 2. Same thing. You can do a 1030, you can do a 3030, up to your preference. Trade runs, full TP right there. So yeah, guys, I mean, depending on your criteria or like whatever the market's giving you, you'll have specific strategies to use. If market's going sideways, use ranging strategies. If market's going directional, use directional strategies. It doesn't necessarily have to be used during those types of market conditions, but you'll get the best results that way if you trade in this fashion. So all right, guys, if there's any questions that you guys have, feel free to hop into the chat. We pretty much covered all the main stuff that you'll really be using aside from the breakout. The breakout, if you're part of the premium, I post the direction of the breakout. I'm not going to explain that one to you guys. I'm only explaining these. But I'm pretty sure this helped you guys a lot because it's a good refresher now that you guys have seen me apply these. And if you guys want to review this mentoring session, the session will be available to all of you. So if you want to just review it, take a screenshot of the criteria, write it down somewhere, have it on your screen. It's just, if you guys want to do that, it'll make things a whole lot easier. Or you could even just take a screenshot of these two right here so that you have a list of like what to apply. Because you can see, I showed you guys all an example of every single strategy from today's live session. Like that's how many times they come up. And if you just focus on like maybe 1 or 2 of these strategies, like you can have 1 directional strategy and 1 ranging strategy. If you can focus on just 1 strategy from each criteria, I mean, you'll pretty much have you'll have your whole trading book available for you. Like that's all you really need, right? You need 1 of these strategies right here, which will probably be a market flow V2 or a momentum pullback scalp, and then have 1 of these right here, which will typically be a V1 variation or a high level momentum scalp. You have 1 of these here whenever market's moving directional, perfect. You got a perfect strategy to apply. If market's going sideways, perfect. You got 1 of these to apply. It's super, super simple. It's just like I said before, guys, you don't need to overcomplicate it. You just got to pick 1 of each. And when they come up, then they come up. You take the entries and stack up your wins from there. Yeah, no, definitely. Nick, you said great refresh. Thanks for this. See you tomorrow. Definitely, Nick. We'll see you back here on the live session tomorrow. Maria said, thank you. Yeah, no problem, Maria. If you have any more questions, feel free to ask Maria. I'm here to help you out. I know, like, it can be confusing and sometimes you might add extra criteria, but once you have them, I mean, it's pretty straightforward. Yeah, definitely. Shannon, thank you. Great refresh. Layla said, thank you for your time. Definitely, Layla. CJ said this session was well overdue for me. LOL. Thanks, Sean. Excited for the rest of the week. Yeah, now that you guys have seen these entries, now you're ready to look for whatever comes up. So it doesn't matter if market's going directional or sideways. You'll have opportunities to enter trades no matter what. So, all right, guys, that was a great session. We covered a lot of this. We made a pretty good push for like an hour. We covered a lot of stuff in an hour. So if you guys like to rewatch this, feel free to review it after we get off this mentoring session, and use this information to your advantage because market's going to be changing over the next couple weeks, and I think there's going to be a lot of moves for you guys to take. So. All right, guys, I think that's it for the day. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys back.